Hello, it is Inauguration Day, which of course raises the question, does it matter which president is in the office in terms of stock market performance? Now, statistically speaking, of course, we have to say, well, does it matter which party is in office? Now, if we look at what happens to the market in the lead up to an election, we see that if a Republican is leading the polls, slightly better than if a Democrat is leading in the polls, which is slightly better than if it's tied. So the market does seem to favor Republicans leading up to an election, but it also really doesn't like uncertainty. Now, we can also see that kind of during an election year, again, going back to the uncertainty thing, it seems to matter a little bit more if the incumbent wins versus if the incumbent does not win. So again, kind of going back to that, market just likes certainty. Now, of course, being inauguration day, the big question is what happens during the first 100 days. Obviously, there's lots of policy implementations. What happens to the stock market during those first 100 days? Here we see, Roosevelt saw a massive turnaround in the stock market. Now, of course, we also saw it during George W. Bush's term. He was going through kind of the tech crisis, massive negative returns in the stock market. We can look at a handful of presidents and see that, that it varies depending on who is in the market. Here, of course, we obviously see George W. Bush's, tough time given the tech bubble crash during the first part of his term in office. Now, we can also go back and look at just every single president going back to 1956, and we can see that kind of in general, the market goes up during the first 100 days, slightly down when it's a Republican in office, and then, of course, more up when it is a Democrat. But you can also see that most of the time, in all cases, it is positive. Of course, now what happens during a presidency? Here, you can pause this if you want to and look at different asset classes during different presidents. But we do see that on average, stocks are up 14.5% when a Democrat's in office and up 3% when a Republican is in office. We can also kind of go back to the presidential election years. Here we do see that, again, the market seems to like kind of the consistency, the certainty, so does better, at least in the stock market, when the incumbent wins, does better in the bond market when there's a new president elected, and then it's just kind of average. If everything's kind of up during all presidential years, which is not unexpected because in general the markets just go up. They go up and up and up and up. So how much statistical significance is there given the fact that the market just seems to go up? Now here we can see kind of the worst years during a presidency were, of course, during Coolidge's term. We can see Nixon and Ford kind of flat there, and Bush to George W. Bush down, not surprising given the collapse of the tech bubble. We can also see that in general, the markets have done well when there's a Republican sweep or when there is a split. So you have a Democratic president and a split Congress. Again, you can see it varies from mix to mix here. And we can also see that, again here, that a split Congress, whether it's either party, seems to be slightly better than a unified government, which is what we're going into now, at least for the next couple of years. We can see that those things are different depending on the mix again. Here, this is just kind of and that gives us a sense of the flows into the market during a presidential year. So it looks like in general people are putting more money into the safer investments during a presidential year, but then after that they go into the market. So again, kind of hedging that uncertainty. Once you know what's going to happen, then you put your money in, but before you know, you don't, which seems a little bit counterintuitive to me, because if you're going to end up putting it in no matter what happens in the end, might as well just do that from the beginning. In fact, that's what we see. We see that in general, you should just be fully invested, that you're going to be better off most of the time, because again, the market just tends to go up over time. Now, of course, the big question I have is there any statistical significance to any of this? One party over the other. There really is a small number of presidents and that we've had over the last 100 years, and so I would argue that the statistical significance to this is probably less relevant than what's actually happening across the globe to the economy and other things that may or may not have been impacted by the president, and at which point in their term they're in. So I would argue there probably isn't really any significance to this, but it is fun to go back and look and just take a look at what the data say. Thanks so much for listening.